Magnolia Capital's Cedric Gray is back with me. Welcome back.
Thank you.
Always
Good to be
nice
back.
to see you. Yes. So today we are going to talk about finances and kind of what all of that means in terms of when you want to buy a house.
Yes, correct.
So let's start about, talk about it in general first.
Okay, so one of the first things that people need to know is that everything that you do financially is going to impact your ability to purchase a house.
Okay.
Your income, your debts, your credit report, your credit score, your credit history, your employment history, all those things are taken into consideration when you're purchasing a house.
Yeah, and I've heard too that like if you're wanting to qualify for a mortgage or something like that, that is not the time to also then go buy a car or go refinance something or take out another big loan.
Absolutely not. The worst thing that you can do is to add to your debt, your debt ratio. So one of the things that financial institutions look at is they look at your debt to income ratio.
Yes.
You want to keep that as low as possible, ideally below 40% or 41% when you're purchasing a home. So anything above that is going to be, it's going to have an adverse effect when it comes to your ability to get financing.
Right. And so you mentioned a second ago, credit reports.
Yes.
Credit scores. You hear that so much. What do people really need to know about that? Are there myths that are associated with credit scores and credit reports? So what are some of those?
So the first myth is that if you can't buy a house unless you have perfect credit. Huge myth.
Okay.
Actually, that's not true. Believe it or not, the lending institutions set the credit requirements for financing. For example, you can go to Bank A and they might tell you that the minimum credit score needed is a 720. Well, Bank B might say, well, we'll do it for 600, depending on the type of loan you would like to do, whether it's FHA, VA,
right.
Whether it's a portfolio loan, which means that they're keeping it on their books, they're not going to sell it to a third party afterwards.
Okay.
So there's different requirements depending on how strong you are as a borrower.
Okay, well, and that goes to then comparison shopping, obviously, for your mortgage, because one person may say no, the other person may say yes.
Absolutely. You'd never take no for an answer.
Yeah.
So.
And so when should they start monitoring that score and that report prior to buying a home?
Ideally about a year out, because if there's any discrepancies on your credit report that you would like to get cleared up, it generally takes about 60 days to get that taken care of.
Okay.
And then you're looking at about another 30 days after that to get a rescore. A lot of institutions will go through and they'll do a rescore for you if you get some things. Let's say you have, let's say somebody's name is John Smith and there might be 10,000 other John Smiths that live in your city. Well, if one of those John Smiths has something on their credit report that's actually inadvertently got to yours, it takes about 30 days to get it off, and then 30 to 60 days to get it off, and then it takes about another 30 days to get a rescore. Okay. So some lending institutions will look at that and say, well, we can go through and do a hypothetical of what it's going to be
like.
Correct.
Yeah. Okay. And so I'm assuming you should just monitor that really kind of all the time as a general practice, your credit report. And so what are some of the other big issues you see when people are attempting to get financing?
One of the biggest things that I see is when people, number one, they don't look at their taxes and how your taxes relate to getting a mortgage. For example, if you have someone that's, let's say that they get paid partial in cash, where they get tips or whatever the case may be.
Yes.
If you don't claim all of that in your taxes, because they're going to ask you, well, how much money do you make? And you're going to say, well, I make $50,000 a year, but you only show $30,000 a year on your taxes. They look at what's on your taxes, what you're actually reporting, not what you're claiming.
Right. So it seems like a good idea at the time to take those tips and not tell anybody about it. But in the long run,
it hurts you.
It hurts
Absolutely.
You. Okay.
It hurts you twice.
Yeah.
Actually.
Yeah.
So.
Right. And so if somebody does have issues, is there a place where they can get help to kind of be guided into how to clean that up?
Yes. So the first thing that I always tell people to do is you rate a credit report from all three agencies every year for free. You can go to annualcreditreport.com, not free, so it's just annualcreditreport.com.
Okay.
You can download a copy of all three of your reports. You want to go through there and make sure that everything in there is accurate. If it's not, you want to dispute that. And you want to get some of that stuff taken off your credit report.
Yeah.
Normally, if you have a few things that's negative on your credit report, you can bump your score quite a bit just by cleaning your credit report up. The time not to do it is right when you're looking to buy a house and know I'm going to move here in 30 days and I want to start looking at cleaning up my credit. Yeah. Now is not the time. So you want to start doing it about a year out.
Excellent. Well, it's always great information. You always come with such fascinating stuff. Thank you for being with us again.
My pleasure.